Hello to you and welcome back to another super quick lesson on wealth management bite size. My name is Sanena Bisht and I'm a financial advisor with the leading financial institute of the country. And today we're talking about life insurance. We're talking about why life insurance is important and how long your coverage needs to be. Now, one of the most common questions that I get asked about life insurance is how is it helping me create my wealth? True, life insurance will not help you create your wealth, but that's one side of the entire equation. The other side is life insurance will ensure that it is providing you that security for making sure your liabilities do not hit the financial well-being and the lifestyle of your family. Once you're not there, your financial goals should still continue in the same manner, and that is what life insurance will take care of. Now, having said that, you could possibly imagine a situation where a person is taking a life insurance at the age of 30 because he has an entire life ahead of him. He has a family which is growing and he has financial goals he need to achieve, right? And that's when he's making a decision that he needs to buy a financial tool to help him protect that particular lifestyle and those dreams. Now, the next question is, how long do you get that life insurance for? Would you need it till the time you are 80 years old? Do you need it till the time you are 70 years old? Till what age should your financial goals be secured by this life insurance? So let's look at that today. When you're younger, you have more responsibilities and you are less financially independent, unless and until you're coming from a family which has given you wealth in abundance. Every single one of us has some kind of financial independence that we struggle with and that we work towards, right? That's the reason why we work. Now, you could possibly be also the only breadwinner for the family. You're the only single source of income into the family, and the entire family depends on you. Now, family could be your old parents that are dependent on you, your wife who's dependent on you, your children, and your children's future, which is dependent upon you. So, your liabilities could be higher. Your liabilities could be your parents' health, their hospitalization or possible medical bills, the bills for your children's education, their uh, senior education, that's their college, their post graduation till the time they start earning, their family settlement in case of marriages, your own settlement, your house, your car, and other things, right? That's most of the stuff that we spend all our money towards. Now, those are very high liabilities for somebody who's in the age of 30, in the age of 20s, in the age of 40. We're still not secure enough in our wealth to take care of all of this without external help. So, what do? We take loans, right? Now, these loans, who's going to pay them out in case you're not there anymore? So, those are the questions that you have in your mind. But now, let's look at the situation of when you're older. So, if you're already 55, if you're already 60, what all have you accomplished in your life? You would probably already have a home by now. You would probably already have taken care of your own medical bills because this is something that you started thinking of when you were 30 years old. So you've taken care of your health and your insurance when it comes to hospitalization, right? Your children would have grown up already, their post graduations would have been done, they could possibly already be married, or they could at least already be earning. So probably you don't need to worry so much about the family income source as well. So your liabilities have reduced quite a lot if you've done a good job throughout your year of managing your finances well. Most of your financial goals should have already been achieved or should be at a 95 of achievement or completion rate. Now, do you need the same kind of insurance on your life at that point of time? Now, why is this question important? Because the longer that you continue with your term or tenure, the higher premium you pay. Now, the misconception that comes in these situations is because people say, but I'm only paying the same amount every single year. because you're paying it every single year, it is already included in your premium, right? So if you're paying a premium which you think is less because you're only paying about 20,000 in an entire year for your term insurance, but you're paying that till the age of 75 in case, and not till the age of 55, then there is a difference of 20 years in between that's coming, right? And that's a lot of amount that you're paying out. I know 20,000 is a wrong example, but I wanted to show you the bulk of money that you're paying for no reason whatsoever. So if you go of whatever reason, your natural death or whatever reason, if you're not there after the age of 75, the amount of money that's coming to you would, how would that help in your liability cases, right? That's one thought. Let's come back to that a little later. The companies are expecting you to live longer. The companies want you to live longer, and nobody is saying that if you have your term insurance, that should be the end of it. Your term insurance is a protective cover. That does not mean you fight your protective cover. They might have given you an insurance term of 75, but they know that you will live to the age of 80, 85 easily, and that's why even at 75 nothing's going to happen to you, but you will continue to pay that extra premium. Do we really need it? That's the question. And second, the term plan again is to secure your family's future. Now your financial goals are achieved, you're no more the only earning member in your family, everything is well settled, there are no deaths in the family. Do we still require a term insurance? Coming back to what we were saying earlier, if you have an insurance till 75 and the claim amount that comes in, the claim amount is not factoring in the inflation in the total environment. So if your claim was, say, of about 50 lakhs and you were insured till the age of 75, and that insurance money comes to your family when you were 74, 50 lakhs is what you decided 35 years ago. Would it still have the value worth of 50 lakhs at that point of time, with all the inflation that's come in between the current period and that future state? Your 50 lakhs would probably be worth, say, about 7 8 lakhs at that point of time. And does it make sense having that kind of coverage, or paying for that long? It doesn't really. So the amount of money that comes to your family even after insuring yourself for that long, it is not helpful. So don't make that mistake. Consider very carefully what your financial goals are. Consider by when you would want to achieve those financial goals, and make your decision basis facts. Don't make your decision basis emotions of, if I or something happens to me, even at that ripe old age, my family will at least benefit for it. That's not the point of life insurance. The point of life insurance is protecting your family's lifestyle while you are the one who's supposed to be maintaining that lifestyle. That's what is important. Come back, or rather go back and visit our other videos which talk about life insurance essentials, where we talk about other factors you should be considering at the time of buying your life insurance, which is as soon as today itself. So go and see those videos also. It would probably help you in making the right decision. Okay, thank you so much. I hope that you learned something out of this video today, and it has at least put a question in your mind in case you're thinking about buying life insurance. We do a lot of other videos on mutual funds and insurance, income tax, and other wealth related topics. Be sure to check us out, subscribe to us. We put new content almost on a regular basis, and share our videos with everyone that you care for. Thank you again.